I would now like to give the floor to Gerald Brady of Silicon Valley Bank. Gerald, please.
Morning, and thanks everyone for joining us, and greetings from San Francisco. We've just about got sunrise here, so I think we're awake and ready to go, and I've got coffee going. And I'm delighted to be joined by my colleague, John Chena. John, if you want to do a quick wave, just so folks know who you are. And then I can see Matt Nichols here as well. Matt, if you want to do a quick wave. And then Amar Hanafi. And then I think Ken Lindstrom is here, and Shuli, if you can both wave as well.
Hey there, I'm Kent.
And there's Shuli. And Shuli's just connecting. Shuli, do you want to do a quick wave? There's Shuli. And I'll start with a couple of quick introductions, but maybe just for folks on the call this morning, one little group exercise to kick us all off with is if you get your mouse and hover over your picture, if you go to the top right-hand corner, you'll see three little dots. If you click the three dots, scroll down, you'll see rename, just click that. And if you could just add your company name next to your name, just so that'll be easy for folks on the call to see which company folks are at. And there, if you've learned nothing else, you've learned how to add another part to your name here. So while you're doing that, let me just start with introductions of my colleagues, and then the format this morning, I'll each ask John and colleagues one question each just to start with. For the entrepreneurs in the group, if you could ask your questions via chat, and my partner in crime, Dorrit here, is going to help me make sure we get the questions asked. Dorrit, if you don't want to do a quick wave so folks know who you are.
Yes, hi there.
And so by way of introduction, let me start with John Chena. John's a colleague of mine. We've worked together for many years at Silicon Valley Bank. John's the president of SVB Capital. John's been with SVB for over 20 years. And SVB Capital is our fund of funds business and direct investment business. I'm also joined by Matt Nichols. Matt is a partner at Commerce Ventures, a serial VC. He's also worked at Highland as well. And he's also been an entrepreneur as well. So he's gone through raising capital and selling a company as well. So brings a huge amount of experience with him. My friend and colleague, Amar Hanafi. I'm sorry, he's an Arsenal fan. He's got no taste in soccer clubs, but there you go. Amar and I have known each other, I'm embarrassed to say, probably 20 years at this point. We met when Amar was at Cisco, running corporate development at Cisco. He then went on to be a partner at Alloy Ventures for the last 10 years. And in 2015, raised a fund and started Moment Ventures. And again, we'll hear more from Amar today. And then we're joined by Shuli Galili. Shuli is a long-standing friend of Silicon Valley Bank and been here in the Valley for 20 years, originally running California-Israel Chamber of Commerce. So very similar role to connecting the Israeli entrepreneur community to the Valley. Very similar experience. And then in 2012, she founded Up West Labs, which helps Israeli startups coming to the States. And so again, that experience of the Israeli entrepreneurs going through what you've done, again, huge amount of experience investing in startups. And she's had companies like SentinelOne come through, and it's a great success story. And then my old friend, Kent Lindstrom. So Kent's a serial entrepreneur. He was one of the co-founders of Friendster. Kent founded 8-Bit last year, and as investors, personal investors like Mark Andreessen in his fund, early stage seed investor here in San Francisco. So again, we've got an incredible range of experience here for folks. So, you know, make sure you make the most of this, ask great questions. We're going to have hopefully an interactive conversation via Zoom, which is not easy to be interactive in, but, you know, feel free to ask questions, probe. We'll try and have a great conversation. So with that, I'm going to kick off maybe with Shuli. And Shuli, my question, she's smiling because it's like, hi. So Shuli, you've worked with probably hundreds of Israeli companies over the years coming to the US and raising from US VCs. And so what's the key advice you give Israeli entrepreneurs as they plan to pitch to US VCs today?
Hi, everyone. It's really nice to be here. Thank you, SVB, as always, for pulling me in to meet new great people. So I'm always enjoying talking to new groups about the experience with Israel, because I think it's very unique, but it applies to founders everywhere, really. And I think that the experience that I've had over the years with Israeli founders is really understand the mindset of Silicon Valley. And I think that is where I often found the gap before, starting our fund in 2012. I've witnessed, and I was a fly on the wall watching a lot of Israelis trying to find their ways into Silicon Valley, and oftentimes making a lot of mistakes along the way. I would say the number one thing that I found that people who come from particularly small markets into Silicon Valley, they lack the ability to articulate the opportunity. And I think that seeing that some of the giants in tech have been founded and scaled here in Silicon Valley, it's oftentimes really difficult to come from a small market and articulate really clearly and tell the story of a big opportunity. So US VCs could, in fact, be impressed by this. And I think that Israeli entrepreneurs, oftentimes we found that they were very tech savvy. They were extremely articulate in talking about the product and the technology behind it, but were not able to articulate the business opportunity and how this could really scale in a huge market. And so putting some emphasis on the market and the market opportunity, I would say, is the number one thing that I would suggest entrepreneurs coming from abroad.
Thank you, Shuli. And I'm going to turn to John. And John, over the years, you've both spearheaded the bank's expansion overseas as well and worked with many entrepreneurs. And I know most recently you led the charge for the bank expanding into Canada. So over the years, you've seen hundreds, if not thousands, of startups pitch and present. And what do you think the entrepreneurs from outside of the US should focus on when they're trying to raise from US VCs today?
Well, good morning from California, everyone. Exciting to be here with this very incredible delegation. Normally we'd all be in Vegas, so I'm sorry we can't be there. I see my Prince Constantine, my friend, is on as well. Happy New Year to him. Joe, thanks for the opportunity and thanks for the question. I guess we're in this interesting year where Zoom has overtaken all of our lives as we commit serious capital. We're investing currently out of a $250 million Series B fund. And we target Series B. So I want to start with that context before I answer the question. I guess what in the world with so much noise and the inability to meet, what's interesting to me is during the last 8 months, VC's activity to invest has actually increased. The velocity has increased in a world where they never get to meet their entrepreneurs, which is quite extraordinary. We would have bet the opposite back March last year. So I guess what we look for is models that can scale. The thing that most people want to believe is really understand your business model and prove to me and show me how you're going to scale at extraordinary levels. That is sort of the pivot point for us when we consider leading the Series B.
Thanks, John. And Amar, I'm going to turn to you. Maybe, you've heard John talk about the ability to scale, and massive scale is attractive. When you're looking at startups today, what gets you excited about the companies that stand out?
Yeah. Thanks, Gerald, again for the invitation. We won't talk football this morning, but it's one of the things that I think about, particularly for entrepreneurs coming to Silicon Valley. And I think Shuli did a really nice job of explaining or presenting how to think about the Valley, is think about where your company fits with our ecosystem, right? So for us, what's very exciting right now, Gerald, is we're a thematic investor, we're a seed stage investor. So our theme of investing is what we call the future of work, which is nice and broad, but we tell the world what that is a fair bit. So I think we are looking for companies. We think it's a tremendous time to be thinking about transformational opportunities in industries that haven't been intense users of technology. So that's what we get excited about. It's a fundamental transformational time, but it has to be at the right stage and it has to be the right company. So I think that's what I would tell you is super exciting to us. I think the other thing I would say, and this is what's really interesting to have people from other countries and entrepreneurs from other places, transforming work is not something that Silicon Valley has a lock on or a monopoly on. Industry expertise exists in many different places in the world, whether it's unusual places like even Tennessee, like places like Nashville, and which is a digital healthcare hub, or Chattanooga, Tennessee, which if you wouldn't know it, was actually a logistics hub. So there's entrepreneurs with real expertise in many parts of the world, including globally. So we're really excited by that and the changes that is bringing.
Thanks, Amar. And before I ask Matt a couple of questions, just to the entrepreneurs in the room, please feel free to start posting questions into the chat here. Dorothy will make sure we get those. Don't be shy. This is a great opportunity for you to ask anything to our VC friends this morning. Matt, turning to you in Commerce Ventures, you again obviously see huge number of deals. What are the pitfalls you see entrepreneurs or the common mistakes you see entrepreneurs make when they try to pitch you?
Yeah, so maybe I'll focus on particularly entrepreneurs coming from outside of the U.S. coming into the U.S. I would say one is not being bold enough. I think if you look at U.S. entrepreneurs, they are certainly bold, and I think venture capitalists get used to the sort of projections and the boldness of those visions. And I think sometimes European entrepreneurs are a little more conservative, probably more realistic, frankly. But when venture capitalists apply that same lens, they've been seeing, say, 80% of the entrepreneurs in the U.S., making these huge projections and huge statements, and then you see a European founder come in and make a more conservative assumption. Even though in your heart that's probably the more realistic assumption, you get viewed in a different light. So I think making sure that entrepreneurs are bold in how they approach venture capitalists in the U.S. Again, you want to be realistic, but also paint a big vision, because that's what venture capitalists are looking for, particularly in Silicon Valley. And then two, and Joe, we talked about this a little bit earlier, is I think the use of advisors and bankers and things like that, I think are probably more prevalent in Europe. And in the US, particularly the early stage, I would say for the most part, that's negative, right? Even though they may have connections, they may be able to help you with your process. If they are the face of your fundraising, you are doing something wrong. So I think ultimately investors are looking at the CEO to be the face of the company, to have the primary interaction. Doesn't mean you shouldn't have advisors who can help you think through the process, but I think the CEO should be front and center as they think about raising with investors in the US.
Thanks, Matt. And I'm going to come back on that topic in a couple of minutes as well. And Ken, maybe a quick question to you just to start with. Again, you've seen hundreds of startups over the last many years. What for you makes the pitch stand out when you see an entrepreneur come to you?
Yeah, I think there's two things. What he was just saying is absolutely right, which is that you have to remember that in Silicon Valley, we're looking for multi-billion-dollar things. And so we'll often see these pitches that are fantastic, and we say, this guy, this woman is going to build $100 million company for sure, and sell it for sure, and be really rich as a result. But that's not what we want to do. We want to invest in something that could be a multi-billion-dollar company. We don't want to be in the Uber for Indonesia. We want to be in the Uber for the world. And the second thing, and this is something that James Currier, who's at NFX Guild, told me a long time ago, has always stuck with me, is you're not trying to convince anybody of your vision, really. What you really want to do is find people who already agree with you, who already believe that mobile commerce is going to change X, Y, or whatever exactly you're doing. And if you do your research, and you find the people who kind of already believe what you believe, you have a huge advantage. So when people come in and I get excited, when we kind of go look back at what happened, they usually figured out what gets us excited, figured out that we're the right guys for them, that they've got a software thing that connects the world in the new way, and have come in and told us what we already believe. So those are the things that I think get us excited, that somebody's really thought about what we're interested in and told it back to us. That's just us being egotistical. And then the vision is world-changing and multi-billion-dollar.
Thanks, Ken. And we're starting to get questions coming in now. So I'm maybe going to ask Shuli and Matt the first question here, which is, as you're working with overseas companies coming into the States, do you require them now to set up as a US business, or are you okay investing directly in the company from overseas? And maybe Shuli, start with you, and then Matt, same question to you.
Yeah. So we have the privilege of being first check in all of our companies, and oftentimes they haven't yet gone through the process of establishing an entity. We encourage them to establish a Delaware entity and help them with finding the right legal counsels, in the U.S., as well as, obviously the banks and the partners that can help them set up the foundation. We found that it's really helpful. We had instances where companies were set up as an Israel entity, and we found that it was a bit challenging for the companies along the way, just in terms of, just another layer of friction that you don't want to have when you approach VCs later on. These companies went through a flip stage where they, changed the entity, which is, kind of like a legal process that they had to go through, but it definitely helps, in terms of the foundation that you build and how you are bringing on board new investors or, customers that will be more familiar with your legal structure.
And I don't have a whole bunch to add to that. I mean, I would say we invest even in, we don't require a U.S. entity, and we have many times. But I think to Julia's point, it just creates friction, right? Yeah. We're doing a follow-on round, and the process is just enough different that it's painful. And it's painful from a follow-on investment, but probably more importantly for that first check. And I think there's so many reasons why an investor is going to say no to you as an entrepreneur. And if you can avoid giving them one more reason to say no, you should. So if you can, you should do it. I don't think it's mandatory, but if the cost is low enough, it's definitely worth doing. And there will be venture capitalists who won't invest in certain geographies, particularly geographies that they haven't invested in before, right? We invested a lot in Israel, we've done a decent amount in the UK, and at least those we're investing the second, third, fourth, fifth time in those geographies. But if you're coming from a geography where this might be the investor's first time investing in that geography, it's going to be even harder. So,
Matt, just coming back in on your comment about friction, we're very familiar with that term here in the Valley, but can you just expand on that for folks? When we say, try and take friction out of the process, what do you mean for folks in Europe about that?
Yeah, so you might convince an investor that they love your business and at the high level want to invest. But really that doesn't turn into an investment until the cash is in the bank. And if there are 3 or 4 steps that they need to go to their lawyers and talk about and understand the docs, and you expand the time from which they say they're conceptually interested in investing and actually funding, anything can happen, right? You can have COVID, you could have any number of events that could happen. They could just change their mind because the deal becomes not as hot as they thought it was. So I think you want to make it as easy for them to go from saying yes, conceptual to investing, to being fully committed, sign docs, cash in the bank. So I think you just want to get rid of anything that slows that process down.
Hey, Gerald, may I jump in?
Sure, of course, Amal.
I guess, another way to think about this for all the entrepreneurs is, I think Silicon Valley, for better or for worse, every venture capitalist on this call has a mindset that no deal is worth doing if you have risk, if you feel risk, right? No deal is worth breaking a partnership over. We live in a world of rich deal flow. And what that means is that any reason to say no is a good reason to say no. And you just want to minimize that. That's another way to think about friction, is you want to remove blockers or not have blockers as much as possible. And the simple ones like a legal structure are ones you should just knock off the table because there's so many other risks as well.
And Amar, just, if I keep that theme going for a second, how do you find deal flow and how do entrepreneurs find you? What makes for a good introduction to you?
Yeah, I think just going back to something that John said, I mean, I think we're living in an incredibly changing time in terms of what it means to find deals and how people are connecting with entrepreneurs and otherwise, right? So look, the classic answer would be, and I think this is still true for many of us, is the best deals come in through people you know and somebody you know in the world, and you find a referral and you connect to a firm through that. The truth of it is, in a world where nobody's meeting anybody, that doesn't quite make sense, right? So it's what we're finding is, and we've taken a very much a thematic approach to telling our story, that people are finding us. LinkedIn is which I've done due diligence on a bunch of deals now that have come through LinkedIn. If you'd asked me that 2 years ago, I'm not sure I would have, because it's just the world is changing in real time. And I think Matt said that earlier, or was this idea, or Ken said it earlier, find investors who have a fit. So you can do a lot of research online, you can reach out to people. It's often still better to find some connection into a venture capitalist that you want to approach. But really, I think, in the end, we are also, as I like to say, VCs are commodity salesmen, right? We sell the ultimate commodity, which is money. So the only way you distinguish your commodity is with the value add you provide or the insights you provide, or you tell people how you're different. If entrepreneurs do enough research, they can find those VCs who are different or looking for what they're doing and meet them. And I think the online world is becoming much more prevalent. Inbound deal flow is becoming much more dramatic for all of us, I think, in this virtual world. And I think that's a good thing because it opens up the funnel for people from outside the country, from outside this region. It's flattening the world in a very real sense.
Yeah, I think it depends on, it could depend on who you are too. Charles Hudson, a precursor, has said this, where if you went to Stanford and you started a company, you should probably get introduced to us, because if you don't know how to get introduced to us and you went to Stanford, we just think it's kind of weird. But if you went to if you're from Europe and we don't know you, or you're from some other part of the country here in the US, and you send us a cold email, it makes sense to us that you don't know how to get to it, that you didn't go to Stanford. And the biggest thing we see is if you pitch us, your meatless meat company, it's like, well, you didn't spend 12 seconds thinking about us. But when we get a thoughtful message that says, look, I see that you were at this company. I see that you invest in these types of companies. That's the easiest one. I see that you invest in XYZ and this fits in there. Could we share what we're doing with you? We'll look at that. We'll think about that, for a couple minutes. So surprisingly, we
do your homework. Seems like a bit of good advice there.
Gerald, I have some practical stuff I want to provide the startups, because I think, I think every VC has its own way of validating, founders who come from unfamiliar areas. And what I've seen that worked really well for a lot of the founders that we backed at the pre-seed and seed, and they were anonymous, from Israel, knew no one. The number one thing I think that is very important is that find your first customer in the US. If you can, first of all, find customers that VCs are familiar with, whether it's, companies in the enterprise like Cisco and such, or even smaller brands, but things that really gets the VC familiar with something that is here, that is in the US, and it's not all in Europe or South America or wherever. And the second thing with regards to advisors, I actually would encourage you to find advisors or early angel investors from a network in the US in your industry. So get familiar with the industry in the US and find those advisors and early angels who will bet on you, because there could be expats from your country. There could be people who are, have made it as founders in your industry, whether it's e-commerce or, cybersecurity or wherever it is. But I think that the more you connect the dots around these early champions, then once you approach a VC, there's going to be a lot more social proof for you as a founder. here in the US, and it will make them a lot more comfortable than being able to reference you with these customers or, you know, early champions that are betting on you first. And I think that is super key for you to kind of get in the door.
Really, that's great advice. So, you know, think about that first customer. That's really helpful. That's super. Dorrit, you've had some questions coming in. I'm just going to hand over to you for a second.
Yes, of course. It's nice to see the ball rolling. We've got a question coming in from Mark Zawacki, and he is actually stating what is the biggest mistake maybe coming from the international entrepreneurs coming to Silicon Valley. He says, besides not thinking big enough, what are the top 3 mistakes from the international entrepreneurs coming to Silicon Valley? I'm curious.
John,
yeah, maybe I'll just jump in and say one of them. I'll let the panel others. I would just say one of our panelists just underscored the importance for you to do your work and due diligence on who you're meeting with. We're often shocked how little work entrepreneurs do on understanding who they're meeting with. And that involves knowing whether the VC you're meeting with has capital. I know one of the questions also was asked online about sectors. I mean, if you're meeting with a VC who doesn't specialize in your sector, that's usually problematic. Normally, that person won't take a meeting, but weird things happen in a pandemic world. So I would just say the number one advice I give is do tremendous amount of research on the VCs you really think could create great value for you. And then secondly, I would just say, know that we're going to do extended referencing in this new world. So you having a prepared deck on who your reference checks are is critically important. You showing up with that first document saying, look, here are the people you can talk to, validate. We're going to do our own references anyway, but the fact that you can help us get started is really powerful. Those are the 2 things I would say.
Yeah, that's great. I have a really particular thing, a particular part of the presentation that I've noticed is often kind of weak. That is, you know, we're trying to figure out how you're going to be $1 billion company. And what people tend to do is they tell you how the thing they're solving is broken and how they're going to fix it. And we're often skeptical, you know, LinkedIn's broken, Facebook's broken. Like, yeah, well, they have 1 billion users, so they're not that broken. But the amount of time people spend telling us how it's going to grow is often pretty weak. And often when we don't invest in something, we're like, yeah, the thing's broken and their thing's a little bit better, but I'm not clear how they're going to grow. Sometimes if you came to us and said, you know, our thing's not that good, but we've got this really clear idea of how it's going to be $1 billion company because we're doing this, this, and this, it's more interesting. So I would say, you know, make sure your answer to that question, like how it's going to grow, is really clever and really thoughtful.
I mean, just to riff on both the answers that you got from John and Matt there, the one thing I would say is I find entrepreneurs sometimes spend a lot of time telling us why this is such a huge problem. They love the problem. They love the market opportunity, but they haven't convinced us why it's a big company yet. If you spend more than 5-10 minutes talking about the market, even though it's important, it's super important, you just don't want that to be everything because you just lose track of what it takes to be a company builder. And then on the venture homework side, I'll give you one piece of very tactical advice. I think Shuli gave you some really great advice about customers is I have found, I must say, like 95% of the time when it's a good meeting, the entrepreneur actually starts out by asking me some questions. So tell me about yourself. Tell me what you're interested in. Tell us, first of all, it's a great way to start a dialogue. And the second thing is, if you learn something interesting in those few minutes, you should be able to adjust. You should be thinking about how do I tell my story better that resonates with this person? You can see a lot of homework online. It also, final point on that is it communicates real confidence on the part of the entrepreneur and an understanding that this is a relationship effectively of peers. We're all building companies together. So I think that's one where I find I learn a lot more, and it tells me a lot about the entrepreneur as well.
Thanks, Amar. And we've had a question that came in from Vince here. Vince, do you want to ask your question directly?
Yeah, sure, not a problem. I was just curious. So you just discussed that it's, for example, important to have launching clients in the US. What are the most important criteria that you're looking for in a startup?
Shuli, do you want to have a go?
I think it depends on what stage you're investing in. I mean, I think that, you know, John is investing in Series B, I invest in seed. There are different kinds of things to, you know, to validate in each stage. You know, I would say that the stage that we're investing in, oftentimes the product is not launched yet. You know, there is really not a lot we can do diligence around the product or the technology. It's mostly around, and a lot around really the people and how they're thinking and how they are, where their kind of motivation and hustle comes from. And I think that is really super key for us when we look at companies. The market is really important, and the team and the makeup of the team and how they are, I would say, complementing each other, you know, as founders is really important for us. It's also important for us because we invest in Israeli founders who oftentimes leave their engineering in Tel Aviv or in Israel, and then they build a business in the US. We realize that at some point, the CEO will have to make that leap into the US. So we really want to know that the engineering side of the company, the CTO, is really strong enough to lead the R&D center in Israel on its own. So the leadership in the team is oftentimes really important to see, not only at the CEO level, but also at the CTO level. And I think that another thing that is really important at the seed stage when you back founders, I want to see people who are very transparent. And I think that is super key to show, when you meet VCs in the US is be transparent, understand how to articulate what you don't know and what you still need to figure out. I think what we like is to see people who are thinkers, who understand, how they make decisions, that we can understand how they make decisions really quickly. And I think that is, the number one thing that I think is really important at that stage, as opposed to, I think, late stage investors. And I will let, John and others comment on that.
I'm happy to jump in here. I mean, I think Julie definitely tackled the main, people, market, team, sort of product categories, but maybe just sort of riffing on what specific things are investors looking for companies that are coming into the U.S. And I think, I think about two different things. One, will your model work in the U.S.? And for some companies, it's super obvious, right? It's clear that it's a problem that is going to work equally well in the U.S. versus whatever home country you're coming from. And the second is, are you able to execute in the U.S.? So is this team who isn't based in the U.S. going to be able to make it in the U.S.? And I think on the first one, really showing, hey, here's what we've learned in our home market. Right, here are the cohorts of customers. Here are the dynamics of how we built this in our home market. And ideally, if you can get any data points early on from success in the US, even if it's just one or two customers or something where an investor can map the success you've had in your home market to the success you're going to have in the US. And the more you can draw that story for them, the easier it will be. So that's how I think about, like, how do you make it, will it work in the US? And then can you execute in the US? I think it's any data points that show that you're able to cross borders, whether it's getting capital from U.S. investors, getting a U.S. customer, even the point made earlier about setting up docs in the U.S. Any of those things that you can prove that you'll be able to sort of execute your model in the U.S., I think are critical, in addition to the core things that the venture investors look at, team and product and market.
Thanks, Matt. John, I'm going to ask you a question. When I moved here 20 years ago, I was blown away initially just by the amazing quality of pitches and the educational background of all the founders. And it looked very different to the way I would see entrepreneurs present in the UK. And maybe it's a bit more confidence, etc. And I just wonder, how much of that is window dressing, and how much do you care about the quality of the pitch you see on the first day?
I think Julie said something really interesting, really about being honest and transparent. I think there's a lot of value now in a quality of entrepreneur being defined by their willingness to share, warts and challenges, which was something maybe even 5 to 7 years ago you'd never see. It was almost uber confidence to a fault. Today, remember, there's not much you can hide in this world. I mean, I want to go back to, we're a later stage investor. We're going to follow a Series A investor and whether you're in Europe or in the US. So we're less, I mean, certainly we want to see traction in the US, but because of our strong presence in Europe, we will invest in a European company, even if their market is Europe. We've done that a couple of times already. But my feedback here is your customers are your biggest advocates. We're going to spend an enormous amount of time with your customers. So how easy was it for your customer to onboard you? How supportive are you of that growth? How the ability for the next follow-on customer to come on board, or the ability to open up a funnel inside that existing customer. Those are things we look for, because we've got a pattern recognition here of how quickly a kind of revenue grows inside. So for us, I think this notion of exposing some of your flaws, your challenges, is what I would say is what's in vogue right now. We like to hear an entrepreneur, our team, I should say, my investment team likes to hear some of the challenges you're facing and how you overcame those challenges to get to scale. But remember, I'm a very narrow focused enterprise kind of Series B investor. So we're a little different from the rest of the group here.
Thanks, John.
Gerald,
on mute there. Amar,
yeah.
If you look at the makeup of entrepreneurs here in the Valley for the last 20 or 30 years, about half of all of the entrepreneurs backed here have not come or not born in the US.
Yeah.
As I look at your portfolio, is that kind of about what you would see, or what's the kind of mix look like in your portfolio today?
Yeah, it's about, we were just looking at this actually in the Fund 2 portfolio, about 40% of the entrepreneurs are immigrants. And that's true. I think the other interesting stats for us, though, Gerald, just related to this group, is 60% of the companies are headquartered outside the Bay Area. So we're quite comfortable going beyond what is the Bay Area. And that's probably good news for people who are coming from somewhere else. But I think the most exciting thing for us, and something not by design as much as just a openness to it, is that 30% of the entrepreneurs of the companies are led by female founders, CEOs. And that's exciting to me, because, I think we're living in a world that's changing dramatically. And I think it's allowing us to do a better job. And it's because we're looking at markets that are different, looking for entrepreneurs that are experienced. And, it's one of these classic things about our business. We're always looking for some level of pattern matching and evolution and business models we understand, but we're also always looking for that discontinuous change, right? And I think it's kind of interesting to see that that's happening in the entrepreneur groups we're backing, in the companies we're backing. And so yes, lots of immigrants, but actually lots of diversity from other places as well, or other kinds as well.
Thanks, Amar.
Gerald,
we've had another question come in. Dorit, do you want to ask that one?
Yes, but I also see Mark Zawacki coming in. So let's go over to Mark first, and I'll come later.
Oh, thank you, Dorit. Gerald, congrats on your running. You're off to a good start in January, it looks like. I've got a question around, there's this paradox, right? Silicon Valley's full of immigrants. You look at the Indian diaspora, you look at every nationality just in the Valley in heaps. My question for the panel is, when you look at hundreds and hundreds of these international startups rock up to the Valley and they look around and they try to get funding, realistically, and it's got to be under 5%, but realistically, the ones that make it, the ones that are going after a big enough market, the ones that have fit in the US market, all the problems we've been discussing for the last 40 minutes, it's 2 or 3%, let's be candid, that really have a chance to raise capital or make that transition and have a go. Is that, surely look at the pattern you see coming out of Israel. Is that realistic, or is that too aggressive?
It's realistic, and I think that the Israelis have no choice but to go to the US. I mean, they have no local market.
Sure.
That's their first market, and they'll continue to be the first market. And so the ones that I've seen that really scale to be phenomenal companies, unicorn level companies, and I think that they really built the right foundation. I think they put an emphasis on building the right foundation early on in terms of hiring the right talent in the US. And I think more than the difficulty of raising money in the US, the difficulty of hiring the right talent in the US for founders who scale, that is, I see as really the number one challenge for immigrant entrepreneurs, is to understand how to hire, you know, the VP marketing and sales who were previously in high-flying companies in the US. How do you bring them on board? How do you sell them your vision so they can really, you can build an executive level at, you know, at the company that you build that can really help you get to the next level. And I think this is where the challenge is for a lot of immigrant entrepreneurs, understanding how to win those talents.
Julie, just on that, and Matt, I'd love to get your perspective on this as well, which is sometimes this culture shock about equity expectations for hires here and also salary expectations as well. And so, you know, Julie, is that really a disconnect today? And Matt, I'd love your take on that as well.
Salary expectations for executives here?
Yeah, and also equity comp.
Yeah, I mean, I think that we see some of the gaps. I mean, not so much, I think, on the early stage, but I think by the time the company has established itself to hire top-notch executives, I would say Series A and B and C, you know, they're pretty much a Silicon Valley company. I mean, at that point, they have US VCs backing them. At that point, you know, they kind of leveling their, you know, they're leveled in the playing field and understand what the standard is with regards to compensation and equity and all of that. So I think there is some learning curve going on there for the CEOs, but I think they're catching up pretty quickly after they've been here for a while.
And Matt, what do you see?
Yeah, I think it depends on what part of the US you're talking about. And I think the biggest shock from hiring teams is probably not the cost of senior level people, which is still high, but it's sort of the mid-level engineers. The cost of those engineers relative to what you could get outside of Silicon Valley is incredible. And I think actually COVID is changing that, right? We're already seeing this sort of move to, even if you are headquartered in Silicon Valley, building a meaningful part of your team outside of that geography because the economics just don't make sense. So I think COVID has just accelerated that. And I think one of the advantages that companies coming from outside of the US can do when they come to the US is not fully transition, right? We see a lot of executive teams coming into the US, keep their engineering in their home country, which I think 10 years ago probably would have been seen as a disadvantage. I think today is actually seen as an advantage. So I think you can turn that difference into, hey, we've got this great culture we've already built, we've got a great engineering team, it's going to be half the cost of the US, and we're going to keep building that while we build some of the business team inside of the US. And I think that can be an advantage today.
Hey, Gerald, can I just follow up on Mark's question? He asked a tough question. I mean, already there's a pretty vetted group, 16 out of 100 entrepreneurs went through a filtering process to get here as part of this delegation. And then Mark's right. I mean, realistically, there's probably a percentage. I wouldn't go as low as just single digits, but I bet you 4 or 5 of you are could be highly considered for some level of VC investment in the US. But I just want to keep underscoring the point I've been trying to make. Right now, American VCs are dying to get to Europe, right? Lightspeed just announced a new office, Bain, General Catalyst. You're going to see that core original group of European VCs expand, I would say, threefold over the next several years. And so the answer may be for many of you to build your companies in Europe and support an incredible opportunity there as well. And American VCs and other international VCs will find you in your markets. But so I just want to be a little more balanced in our conversation, that it's not all about coming to the US. I mean, certainly you have some great examples with iZettle and Celonis and UiPath, you know, creating a great example for many of you on how to do it here in the US. But I would just argue that just watch in just the next few years how many American growth funds are coming into Europe, particularly the United Kingdom. So just wanted to give you that perspective as well.
Thanks, John. Amar, I want to pick up on something that Matt mentioned and get your take and Matt's take on this. Matt, you talked a little bit about just the importance of culture, and I think this has really changed in the last few years in startups, where it's gone from being a maybe not something that was explicitly talked about to the culture in the company seems much more important today. And Amar, I'm just curious, is that true? And as you look at a startup, how do you think about the culture in that company?
Yeah, it's a good question. And I think it's related to what some of the other topics we've been talking about, Gerald. As Matt was talking about geography and hiring people, I realized that a few years ago, if you remember, WordPress was such a unique company for being fully distributed, right? It was almost the only company you could talk about that's fully distributed. And now many companies in our portfolio are fully distributed and virtual. And when you have that kind of environment, culture matters, right? How do you create culture? How do you reinforce culture? What's the cadence of the company's meetings? It's something we think about. We're seed stage investors. So for us, it is still relatively organic in terms of thinking about the founders, meeting them, talking to customers. It's part of our overall diligence of the company. But I think if this is going to work, if this distributed model is going to work, and it is going to work because reality economics is going to drive that, the ones that are going to win are the ones that have a culture that is effective in a distributed sense, right? They value culture more because they are running their company through culture, because they're imbuing it in their communications, in what they respect and what they value. How do you interact online? What's the cadence that you require for in-person meetings if you are requiring? How do they interact with customers? All of those things are becoming more valuable. And I think the paradoxical nature of this online shift, or this changing nature of work, is that those human skills and those human values are more important than ever if you're going to have a scalable business. So I think it's a great point, and something we think about very actively.
Thanks, Amar. Just to the entrepreneurs on the call here, we've probably got another 5-7 minutes left here. So, if you've got any other questions, feel free to just ping Dorrit your questions. But in the meantime, it'd just be interesting to ask each of the VCs here, what kind of themes are you excited about this year? And Matt, you've got a laser focus at Commerce Ventures, so maybe start with you in terms of what are the themes you think will be exciting this year for you?
Yeah, as you can tell from the name of our fund, Commerce Ventures, we're all about commerce. So it's infrastructure technology for retail and financial services. And I think we've been investing in sort of the digitization of both retail and financial services for 8 or 9 years now, since the beginning of the fund. And I think what we've seen with COVID is just accelerated that, whether it's tools and platforms for delivering better e-commerce experiences, ways to use those physical assets in ways that are sort of friendly and helpful to consumers. On the financial services side, thinking about all of the accounts we all open 5 years ago, 80% of those were opened in person, and now it's 100% flipped. So thinking about all of those experiences that can be accelerated, made better, made more efficient through digitization across retail and financial services is where we're focused.
Thanks. John, just turning to you, any themes that stand out for you this year? And I know it'll change a little bit by geography as well.
Well, Amar already talked about the future of work. I think this is a really interesting theme. I do think you can capture a lot there, but we made an investment in a company called Guild Education. We think education is going to be transformed. We're already all seeing it. This is in worker education, right? Different from college education. Most people don't realize that very small percentage of people actually go to college as compared to the broader workforce. And so there's an example that we're really excited about. And then the other area continues to be anything driving the enterprise. We invested in a software company called Humu recently that really is driving how workers help one another learn and advance and personally develop. And again, in a distributed world where we're not next to each other anymore, and we at SEB don't believe we're going to come together anytime real soon. And so again, we're looking at the trends of how people are behaving, interacting, learning. And so those are the trends we really like to see.
Thank you. Ken, obviously you're a very early stage investor. So, how are you thinking about themes today?
We don't. One of the things we really try to do, we're not the entrepreneurs anymore. Yeah, we're building a VC firm, but our thesis is things that connecting people and businesses in new ways. But we don't want to tell the entrepreneur what that is. We want the entrepreneur to, nobody knew there was an Uber before there was an Uber, right? Nobody knew there was an Airbnb before there was an Airbnb. So if an entrepreneur comes to us and say the world is going to connect in a new way, and this is it, this is how banks are going to connect, this is how education is going to work, we want to be open to it. So we're just excited about people connecting the world. Obviously, this is accelerated, connecting the world in new ways. Obviously, on theme for us, given our backgrounds. In particular, though, we find fintech's had a lot of interesting things coming toward us. The space of digital assets, as people need to create more and more assets, things like Canva. But broadly writ, we're excited about the world being reconnected in new ways.
Thanks, Ken. Dora, I know you've got one question from an entrepreneur that just came in, so I'll squeeze this one in if we can.
Yes, we have 6 more minutes, but this question comes from Ewout Lubberman from Leidenjar. Ewout, are you here? You can come in. You can unmute yourself.
I am. Thank you very much, Dora. So yeah, no, I wanted to get some of your input or get some of your opinions on what you regularly see in post-deal governance setups, especially when investment consortia get a little bit bigger. So how to look at who gets board seats? Is that just a lead investor, or is that really a bigger group? How to deal with early angel investors? And also how intense is a contact that you can expect between a management team and a board? To what extent is it a coaching role, and to what extent is it a governing role?
You want me to, Gerald? It's an interesting question. I guess one of the things that I would say is that being a CEO is a unique skill. You're working for a board, but you're also leading the board and you're leading the company. So I think the question is probably inside yourself on that one. People will have requests of what they want or insights, but it's your job to shape this to be what you want it to be, and how many people you want there and how you want that to engage. And I think that's one of the situations I've had in my careers was a great executive who didn't know what it meant to be working for a venture board. He'd been a great operating exec at a big company, but that transition of leading those board members, yet also understanding how to take direction from them. So I guess 2 parts to you. One is you should manage that board to be the size and the scale that you want it to be, and realize that you also still have to work for these guys. There's deals to be done, so you have to think through that as well. But there's no cookie cutter answer to this question. It really comes down to those situations. So sorry to make it a Socratic sort of Zen-like answer back to you, but I think the answer is within yourself and how you want to run your company.
Thanks, Amar. We've got 2 minutes left. So, Matt, go on.
I was just gonna add one small thing, which is I think a lot of people focus on the voting rights and the voting dynamics. And in all my history, I've seen very, very, very few circumstances which actually come down to a vote. So I think it's the interpersonal dynamics, and getting the board that will help you is going to matter much more than, oh, how many board seats are there, who can vote what, because it almost never comes down to that, even though that's what you think about when you're doing the docs.
Thanks, Matt.
Yeah, thanks.
So we've got a couple of minutes left. So very quick last bit of advice.
I also heard that Michael still had a question. Michael, you can unmute yourself.
Yeah, hi, great that everybody's here, and thanks for sharing all of these insights. I have one question. There's also a lot of talk about corporate venturing. I mean, they are beefing up as well. What's your take on corporate VCs and also other alternatives? Venture debt, it's something that's coming up as well. So could you also share a little bit about alternatives in terms of fundraising?
And that in only 2 minutes. I'm sorry, guys, but we are rounding up.
John, do you want to just quick view on corporate ventures and debt?
Well, I think that's your area of expertise, Gerald.
Yeah.
Well, I mean, I'm biased, but I will give you a take, which is, across enterprise software, it's about 25% of all capital in the States today is coming from corporates. In healthcare, it's 40%. In energy, it's 40%. So corporates are material, they're not going away. And I think now they're very established. If you see a GV, etc., on the cap table, I don't think it causes any surprises. And Matt, Amar, maybe your take on that, because you work with the corporates a lot as well.
Yeah, I guess what I would say is I used to run corporate development at Cisco, which is all the venturing stuff. So I know the role well. Corporates can be super helpful and effective, and they are experienced in this business. Two things I'll say to you though. One is corporate ventures, for everything that they bring to the table, their financial livelihoods is not really tied up with your investments as much. It is somewhat, but they have jobs. So what I mean by that is sometimes the urgency and the continuity that you would expect from your venture capital investors may not be there that you look for. And then finally, I remember when I went from corporate to VC, the thing I loved best about it was the clean sheet of paper I had to think about business models and value creation. And I think if you get corporates involved too early in companies, you sometimes lose that creativity. So bring them in when you think is the right time for them to add value, but not when they can influence your business in a direction that may not make the most sense.
All right, time-wise, we are almost going to Dirk Jansen, Consulate General. Gerard Brady, any last words for the VC Roundtable?
Well, so firstly, to our panelists this morning, thank you so much for your time. And I know it was early, so thank you. Appreciate that. To the entrepreneurs here, feel free to reach out to me or the folks here. You'll find them all on LinkedIn as well. This is a great opportunity to ask any follow-up questions over LinkedIn. Matt and others, I'm assuming that's okay if folks reach out and say, yeah, I can see people nodding, so they'll find you on LinkedIn. And I know a lot of content there, but thank you very much for your time, everyone, this morning. And Dorrit, with that, I'll hand back to you.
Thank you.
Thank you so much, everyone. Well, let's see if my colleagues in San Francisco are ready for the next part.
We are ready.
Thanks.
Thank you, Dorrit. Thank you so much, Gerald. And big thank you to our panelists, Shuli, John, Kent, Amar, and Matt. It was great. It was truly a peek behind the scenes and I think definitely helpful for our 90 companies participating in CES this year. Great to have you with us, and thank you for supporting Holland in the Valley.